love to have mouth-watering dishes at a restaurant? Or are you too busy with your day-to-day life and like to have packed food from a supermarket on the go? There is a little bit of Knox in your life one way or the other. Knox, you must have heard about us.
Hello and welcome to another episode of Business Matters. I'm Sutantu and have with me the co-founder of Knox Foods, 𝗕𝘂𝘀𝗀𝗀𝗀. Welcome back to the show, Prableen. How are you?
Hi, Sutanto. I'm well, thank you. It's a pleasure to be here.
So let's take a quick look at the key points that we'll be covering today. The slowing down of the Chinese economy, unexpected rate cut by China's central bank by 10 basis points, and will it lead to short-term liquidity in the market? So I wanted to start with China's recent economic slowdown first, because they've often been labeled as the fastest growing economy in the world. What are the significant factors which would have contributed to this recent economic slowdown?
I think one of the major factors is China's zero COVID policy. So I'm not sure if you're aware, but they constantly have lockdowns and restrictions to keep up with this policy. And what that means is that it's actually very difficult to sustain any kind of economic progress. So for a country that is so reliant on constantly growing and promoting that growth, it is very difficult for them to do that in this current environment. That is one of the major things. And then the recent economic data that's coming out of them is also not matching the expectations. So if you look at their industrial production, it was estimated to increase by 4.6%, but it's only risen by 3.8%. If you look at their retail sales, that was estimated to be up by 5%, but it has only gone up by 2.7%. And similarly, their fixed asset investments were estimated to be around 6.1%, and they were up only 5.7%. This is all year on year, but you can still see that it is all well below the expectations of the market from them.
And let's not forget the property market. That is one of the worst hit industries, correct?
Definitely. Property sales were down by 23.1%. And as per the reports that are coming in, nearly 65 million housing units are actually being unoccupied at the moment.
Oh, that's a lot.
Mm.
But isn't a rate cut what everyone wanted, as rate cuts usually help to increase the demand, and often that leads to increased disposable income as well, right?
Yes, look, Susanto, the thing is that when a country is at a position that it has to introduce a rate cut, that is not a good sign. So, yes, for the common man, for you and I, a rate cut is what we want because we'll have more money in our pockets. But
Mm.
it's not what everybody wants. That's not exactly how the government would want the economy. It's not the position they would want the economy to be in at the moment. The markets run on sentiments, and what this has done, and what this will continue to do, is introduce the sentiment of fear that the world's quickest growing economy is actually not growing at the pace that they're expecting it to grow. So even last year at 2021, they grew at 8.1%, but what expectation from them was 8.4%. So it was already lower than what the markets had been expecting. And a measure like this, which has come as a surprise, reaffirms that belief that they're actually not growing the way they're expected to grow. And that's a huge downer for China. It's not a good news for the world economy as well. And according to reports that came out yesterday, they've slashed two of the key rates. So they've slashed the prime rate, the 1-year lending prime rate, so the LPR, and also the 7-day reverse repo rate. So just as a quick idea what they are, the 7-day repo rate is basically the lending rate that the banks would give to the reserve banks, to the central banks. And similarly, the 1-year prime rate is basically what the central bank would be giving to the big commercial banks. So they have actually put down these rates by around 10 basis points. So if I was to step back and look at it as the bigger picture, I would think that this is the starting of something bigger. So they have started with the rate cut and it is going to continue. I wouldn't think that this is it. I understand the sentiment of what they're trying to do. They're trying to make sure that there's more money coming in the market. People have more disposable cash. Businesses will have more cash. They can invest that into resources. They can borrow more. Banks can start lending more. So they've started the cycle for that. But to say that this is it is not. I don't think this is quite it. This is just the starting. This is what I feel. um but yes, what this means is that they can feel the slowdown, and the world economies now will also feel the slowdown and reassured me that yes, this is where China is headed and this is what it looks like for them. It's According to what it looks like right now, it's a short-term measure, and yes, if it continues, then it would have a long-term impact. To think that just 10 basis points would have a huge
Mm.
impact, I doubt that, but it's a starting point. It's a very good starting point for them if this is what they think the position they're in.
So no wonder most of the companies that are listed on the Chinese stock exchange, like Nikkei, they were all down today.
Yes, and the commodity market's also down. I think we've all seen that. You and I were discussing that previously as well. The commodity markets
Yeah.
have felt the hit, which is expected. They were the first ones to feel it, and China is, crucial to that market. So once they feel there's a slowdown coming, everyone reacts, and that is the nature of financial markets.
There was a really interesting point that you mentioned about companies and their capacity to produce. As we all know, China is one of the major exporting countries as well. So, how will this rate cut impact their businesses, and will it be a positive sign for, to increase their export capacity as well?
Yes, so I think in terms of rate reduction, could that lead to is, as we mentioned previously, that it will mean more disposable cash for businesses. They will borrow more, so that means the production capacity will increase. The prices will go down. They will have the ability to sell more. What that means in terms of us for Australia, that could mean that eventually, if this continues, the prices could go down. This is the import prices for things that we get from them. Um, but in saying that, it is all reliant on how consistent these measures are, because as I mentioned previously, it's a very small rate cut that's come in the picture at the moment. So if this continues, then yes, it will make an impact, and the markets will feel that the businesses will feel it straight away. Even 10 basis point is enough for a business, so they will start feeling it straight away, which is good for them. But I think for individuals, their loans won't be reset straight away. They will need time. They can't be reset this year. So I'm not sure if you're aware, but loans will not be reset this year. So they will not feel it straight away, but businesses will. So it'll be good for the businesses that they will have more cash flow. So improved production, improved export capacity, 100%. So overall, it would have a positive impact. Yes.
So that was really interesting that you mentioned all those things, how it is related to Australia as well, something that a lot of people might not have even thought about. So thank you so much for your time. Thank you for sharing your expert analysis on this situation. Really appreciate it.
No worries. Thank you for having me.
Thank you so much for tuning in. If you haven't already, please subscribe to our channel for all the latest business news. Please do share your views with us in the comment section below and like and share this video. See you all in the next one.